Hi, welcome to today's awesome class and awesome meeting. Today's class is going to be wonderful because we'll be talking about something very, very important in trading, in the life of every trader in this class. So, what we're going to be talking about today is divergence. Divergence. Don't bother, it's not something much, but it's something very crucial. Even as a professional trader, I still make use of divergence in the forex market today. Divergence is a leading indicator in that there are even some traders that even trade only divergence in the forex market. They don't trade no other thing but divergence alone. So gaining mastery of divergence in the market is a very wonderful strategy and a very wonderful skill in the forex market. So what is divergence? Now, before I go into this, do well to subscribe, share to your friends, your families, everyone, so that by the time I upload more videos, we upload more videos, you're gonna receive them free of charge. So, what is divergence? Now, those of you that did physics, probably in your secondaries, your college, or whatsoever, wherever you graduated from. Now, the thought convergence, divergence. Now, convergence simply means when two or more trains are coming together, converging, convergence. But divergence, moving away. Now, divergence in the forex market simply means when the price is moving in a different direction and a particular oscillator or a particular indicator is not doing the same thing but moving away. Normally, spotting divergence, you can use the MACD, you can use the RSI and so many other indicators or oscillators in spotting them. But for the sake of this class, I'm going to use RSI. Now, let me take you to the chart. Let's take for instance, we have something like this. Now, I believe by now you should know where to get your indicators or your oscillators in the forex market. Now, you go to your indicator list, you go to oscillator, you go to your relative strength index. Okay, so my RSI is here. Now, looking at this, you will find out that whatever price does, oscillator will do same. Whatever price does, oscillator will do same. Now you can see price here moving up, you see oscillator moving up, price trying to come down, oscillator. So whatever price, it's just like the price copying, it's just like the oscillator copying the price, because oscillators and indicators are like equations solved from price action. So whatever price does, oscillators and indicators will also do the same. But it gets to a point, price will start doing a different thing, oscillator will start doing a different thing. Let me take for instance, price will start buying or making a particular pattern in the market, while oscillator will be making a particular pattern. So that brings us to the next thing we have on the slide. So we have two types of divergence in the forex market. Just two types. Now, we have the regular divergence and the hidden divergence. Don't bother, it's nothing much. If you've done your chart pattern or you watch the video on chart pattern, you'll find out that under chart pattern we have two types, reversal pattern and continuation patterns. That's how it is to here on divergence. Consider your regular divergence as a reversal pattern and consider your hidden divergence as a continuation pattern. Now, regular divergence, you look at your chart just like your chart pattern, you look at the market. How do I know that this market has been buying will soon reverse and start selling? And how do I know that this market has been selling will soon reverse and start buying? So that is what the regular divergence is. It gives you information using or with the help of an oscillator. You will know that that market that has been buying, it's time for it to reverse and start selling, and that market that has been selling, it's time for it to reverse and start buying. Now that is it. Why the hidden divergence? That market has been buying, we continue buying, and that market has been selling, we continue selling. No reversal in hidden divergence, it shows continuation. So it's nothing much. Regular divergence is a very good indicator. It's a very good strategy. Let me not use the word indicator for now, because most of us might misunderstand what I'm trying to say, but it's a very good strategy whenever used very well and professionally. Now we move to the regular divergence. There are two types of regular divergence: the bullish regular divergence and the bearish regular divergence. Just like your normal chart pattern, under the reversal pattern we have continuation, we have bullish reversal and bearish reversal. So that's how it is on the regular divergence: bullish regular divergence and the bearish regular divergence. So that is it. It's nothing hard, it's nothing difficult. Bullish regular divergence and bearish regular divergence. Where bullish regular divergence is to tell you, oh, this market has been selling, we soon buy. And bearish regular divergence, this market has been buying, we soon sell. So let's move to a good example of the bullish regular divergence. So this is a very good bullish regular divergence. Now, before you say a market is a bullish or a particular pattern is a bullish regular divergence, first of all, the market must have been in a declining phase. Not only declining phase, the market must have been selling. Now the difference is this, and whatever is doing too, oscillator, which is the RSI, will also be doing the same thing. Now the difference is in this, it will sell to a point, the sellers start losing strength, we start having strength from the buyers. It will sell, but to a point it starts showing weakness from the sellers, we start having strength from the buyers. You now start seeing market closing above, forming you now start seeing the chart or the price forming a pattern known as lower lows, while oscillator forming higher lows. Instead of the oscillator or the indicator following the price, it start doing what is called higher lows in the forex market, while price is doing what we call lower lows. So at that particular time, you can use anything, your trend line, anything to spot the difference. You can use anything to spot the difference, but it's very easy. You see price making lower lows and oscillator making higher lows. I believe by now you know what I mean by lower lows and higher lows. If you don't understand, do well to watch the video on types of market. Do well to watch the video on types of market. So price will be doing lower lows, while oscillator will be doing higher lows. So that is it. So let's move to the chart, seeing if you can spot it. Let's go. It's very easy, very easy. If we see it, you see it. If it's there, it's there. You don't have to stress yourself. You do not have to stress yourself. You don't have to stress yourself in the market. You don't have to stress yourself in the market. Let me use a much higher time frame. A much higher time frame in the forex or on this particular chart. Remember, we are checking for bullish regular divergence. Bullish regular divergence. One of the ways to know or to see it or to be able to spot it is the ability for you to know your W and your M patterns. Your W and your M patterns. Your W and your M, which is the double top and the double bottom pattern. Your W and your M pattern. Your double top and your double bottom pattern. So that's one of the ways for you to also know it. It will get to a point, it will be very easy. It is very easy for you to actually spot it. But for the sake of this class, for the sake of this class, um, for the sake of this class, all you have to do, you have to make use of your reverse. For the sake of this class, you make use of your indicator or the RSI we use. Now look at this very well. Look at this. I've seen a very good one. Look at this. You will find out that the market was actually making a particular formation, lower lows, and the oscillator making higher lows, higher lows. We actually passed it. We actually passed it. We measured it. We passed it to this other place, but I had to come back to show us. You can see price making lower lows. Because this is high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So price making lower low, oscillator making higher lows. So that is it for this particular type. So we move over to the next thing we have on the slide, which is the bearish regular divergence. Bearish regular divergence. This one is seen at the resistance zone. This particular type is seen as the resistance zone. Market must be in an advancing phase first, that is in an uptrend, buying, 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 buying. So it gets to a point, there we now see a disparity between the price and the oscillator. Price starts making what we call higher highs, and the oscillator makes what is called lower highs in the forex market. So let's see if we can spot it. Higher highs, lower highs. Now let's see if we can spot something like that. So we go back to our chart. I would like to use the 1 hour time frame. 1 hour time frame. So if we see it, we should be able to. Okay, now take a good look at this. Take a good look at this. I believe yes, it's already there. Now take a good look at this. Take a good look at this. You can see price making higher highs, and oscillator making a different pattern, lower highs in the forex market. Now if you understand your W and M pattern, it's very easy. Price doing a different thing, oscillator doing a different thing. It's very easy. This is very easy to spot. All you need is a particular formation in the forex market. All you need is to be able to have the forex eyes to spot it. Now take a good look at this. Take a good look at this. You will see it. Now you can see higher highs, lower highs, higher highs, lower highs. So it's as easy as that. So if you're unable to spot it, that means one has to do more work. So it's very easy to spot divergence in the forex market. Now that is it for regular divergence. So we move over to the second type, which is known as the hidden divergence. Remember, the hidden divergence shows continuation. This buying market, this market has been buying, will it continue buying? This market has been selling, will it continue the sell? So it shows continuation in the forex market. And a good example of them is the hidden bullish divergence. Hidden bullish divergence. The market must be in an uptrend first. Then it gets to a point, we start seeing something like a consolidation. A consolidation, but the market like a range. But the difference is that it's ranging towards a resistance, forming higher lows. In an uptrending market, all you got to do is to wait for a confirmation. Remember everything I've been saying, there must be a confirmation. There must be a confirmation. I see the market oscillator forming lower lows. Oscillator forming lower lows. All you got to do is get a confirmation, candlestick confirmation, including for the regular divergence, bearish regular divergence, bullish regular divergence. Get a confirmation. You can see market forming lower lows and oscillator forming higher lows. So whenever it's spotted, there is possibility that this market is gonna buy, provided it's in an existing trend. Don't go and trade it in a ranging market. You do not trade it in a ranging market, exclusively for a trending market with your candlestick confirmation. That is how it is too for a bearish hidden divergence. Market be forming what is called lower highs. Market will form what is called lower highs, while oscillator will be forming higher highs. Oscillator forming higher highs, market forming lower highs. So whenever you see it, it plays out. Remember your confirmation, your candlestick confirmation is very very key. Remember to share, like and subscribe so that by the time we post more video you're gonna see it. So as a way of recap, or a way to go through what we've as a way to go through what we've done already. So the topic, we started by teaching the divergence, and we say divergence has to do with disparity, differences between a particular one stock from the other one. It shows that price doing a different thing, oscillator doing a particular or a different thing entirely. We went as far as learning the types, the regular divergence and the hidden divergence. The regular divergence, we established that regular divergence shows reversal in the forex market. That market has been buying, what is it that will help us to know that it will reverse and start selling? And that market has been selling, what is it that will help us to know that it will reverse and start buying? So it shows us reversal in the market, while hidden tells us continuation, that that market will continue buying. That market that has been selling will continue selling. Now we went as far as bringing the bullish regular divergence, which is initially found in a down trending market. Market must be trending down, but to a point we start seeing loss of strength. We start seeing loss of strength from the sellers, causing market to form lower lows and oscillator forming higher lows rather. Oscillator forming higher lows, while market forming lower lows. Remember, confirmation is very important in the forex market. So we went as far as talking about the bearish regular divergence, which is seen in an uptrending market at a resistance zone. Most times it comes with double top pattern, and the oscillator start making lower highs in the market. Remember, there must be a confirmation before taking entry in the market. Then we talked about hidden divergence, two types: the bullish hidden divergence, the bearish hidden divergence. Bullish hidden divergence is found in an uptrending market, which shows continuation in the market, just like this, where price will be forming higher lows, like a consolidation, like a range towards a resistance. All you got to do is to wait for confirmation, because price or oscillator will be forming lower lows. Wait for a confirmation in the price and take an entry for a buy in an uptrending market or existing market. So we went further to talk about the bearish hidden divergence, which is seen in a downtrending market. Price forming what is called the lower highs, while oscillator forming higher highs. So do well to share, subscribe and like, share to your friends so that they will enjoy the benefits we have for this class for free. Thank you so much. I love you.